Hey traders, Kyle Fisher here. It's September 17th. Let's go through the market real quick on the macro level. Let's get a sense of where we're at. I'm still bearish here. We held support at 18,000. I still think we go back 100 points to test that again. We're now below our 13 and 20 EMAs. I still think there's plenty of room to drop here in terms of the Williams indicator. So the SPX says the same thing, really. Looking at the Russell and the small cap space, we're seeing the cross of the 13 and 20 EMA, and we're definitely still overbought. So we saw some buying Friday on the day's lows, but I don't think it was really anything to run home to and shout about. So I still think we pull back. My initial target is going to be roughly 1175, right in this level, which would be this pattern or this area of support from back in June. So the takeaway is we are obviously still short. I know we have 2 open long positions and 2 open short positions. Quickly looking at those, scene continues to consolidate and form this nice tight flag. When I'm looking at this, the one thing I look for is, are we holding the midpoint of the breakout candle? And that level, if I can draw it, would be here. Here's your level of resistance, which kind of correlates back to the 200-day moving average, and we're just bouncing in here. So eventually I think we pop. And again, this level here, this candle, the midpoint held. And that's telling because there was a lot of volume here. That was, I think, right around their earnings release. Obviously, good news came out. We pulled back. The midpoint here held perfectly. It's held a few times since then. And I think we're going to just continue to consolidate and then break through that, which is good. So seeing I'm still very bullish on for both fundamental and technical reasons. TK gave me a little scare Friday, but at the end of the day, I think we're still in decent shape. We're seeing support here, both in the Williams and the RSI indicators, and we're starting to stair step back up. And what I mean by that is a cross of the 13 and 20 EMA. We broke through it, pull back, held support, rally, pull back, hold support, and rally again. So typically these waves, and you can kind of correlate it to a theory, it's Elliott wave theory, although I'm not using that here, where stocks tend to move in patterns of 5 or 3. It's usually 5 up, 3 back, 5 up. Or if you're short, it's 3 down, 5 up, 3 down, or I might have flipped that. But nonetheless, you can see the certain waves here and what they call stairs or stepping up. And obviously that's continuing here. So hopefully we hold 7 in early next week, and then we continue to rally up to 8 and above. So they're the 2 longs. The 2 shorts, the one new one, MIFI, I think has plenty of room to go down. We're still seeing a downward trend here and here. And frankly, now we can't get back through the 13 EMA, which is good, nor the 200 or 20 EMA. Once these cross, I'm hoping that we just collapse back to 2 or 211, which correlates back to the 200-day moving average. One that we are in the black in already is MITL. I think we're up 5%. Saw some modest buying on low volume last week, but that said, it can't break through the 200-day moving average now, which is good. Looking ahead, though, to our new positions, or new watch list positions, I should say. AKG on the short side completely broke down. I still think this has a ways to go. It's going to test probably 3.6, which is support. Once it tests that, if it breaks it, I think we'll go short then. But that's 35 cents away, so I might want to capitalize on that test and still go short Monday. So keep an eye out for that. AREX is another. We missed a lot of this move already, unfortunately, from 425 to 298. Which sucks, but at the end of the day, I still think we would go short now. If anything, it's going to test 260 and probably hold that for a few days and then break through it. So that said, I'm looking to go short. There's a lot of downward pressure here given where the market is. And if you see the 13 and 20 EMA cross, I think this could drop significantly more. And last but not least is one long option that I actually found was EGO. Another gold play that rallied pretty nicely last Friday. Saw a complete breakout here, broke through support or resistance of 3.8, seeing a nice uptick here in the Williams and the RSI indicators, and most importantly is it broke through the 200-day moving average. So the volume here is significant, especially over the last week. And if history repeats itself, last time it kind of made this pattern, broke through, you saw a cross here, broke through the 200-day moving average, pulled back and rallied a buck, actually $2. So it would be nice to see that happen now, and this is the one long option I have. So that's it. If you have any, obviously, questions, shoot me an email. Have a great rest of the weekend, and we will talk Monday.